Here on The Colour of Country Life, great to have back with us from Rabobank, Cheryl Kalisch-Gordon. How are you, Cheryl?
Well, thanks, Rikki.
There's a lot going on around the world, and first of all, I guess looking more broadly at, the global market prices, well, they seem to be on a downward trend, but a little bit of an uptick in recent times.
Yeah, look, I think you've seen the world trading on the hopes that the grain corridor out of the Black Sea would be a real silver bullet to the high price environment. Post that anticipation of hope, I think we're returning to a focus on fundamentals. That move down also was affected a little bit by, the Northern Hemisphere harvest. So that supply is coming to market. So those two features, hope on the Black Sea plus that Northern Hemisphere harvest, meaning the physicals coming to market, means that we did see that pressure coming down. But yeah, the market now is returning and going, well, actually, despite all that, we're not probably going to see a silver bullet out of the Black Sea grain corridor, and fundamentally we still have low stocks globally.
Yeah, and interesting on that note as well, we saw a grizzle in an online forum from a farmer who was talking with a Canadian colleague about how they were getting very good prices for their wheat, but there's some local domestic factors in play there, you reckon?
Yeah, well, if you think about Canada's position, I mean, they are having a massive resurgence year on year in supply, but their stocks remain at more than 60-year lows. So, you need a strong price incentive to actually move grain out of that country because they're rebuilding their stocks at the moment. And it depends on which grade of wheat. If it's one of their high protein wheat, there is some inelastic demand for Canadian hard red spring wheat in North Asia, and with the freight dynamics from Canada, West Coast across to North Asia, you do have a situation where there's going to be some strong demand signals and lifting prices there. By contrast, Australia has ample stocks at the moment, so we need less of an incentive to get that grain off farm and out of farmers' hands to move to markets at the moment.
Now, I'm looking at the latest Agribusiness Monthly out from Rabobank. You've got a headline saying goodbye to extremely high prices. Is that an observation of what we've seen or a projection of where we're heading?
Oh, look, I think that's both. From the beginning of the year, we had an underlying expectation that prices would remain elevated over the forecast period, but that we would see some downside as the year moved along. Now, we, of course, had the Russian-Ukraine event that's ongoing come to bear on the market. We have moved past the initial shock of that on global markets in terms of supply. The world is getting used to thinking about it has to, seek alternative supply routes. So that shock into the market has moved away. But, whilst we're saying goodbye to very, very high prices that were, as a result of Russia moving into Ukraine, we're still going to remain elevated. But the problem is that are they elevated enough to cover the higher costs of production that we now face? And so that's the challenge for our growers here in Australia. Particularly into next year. This year, we should still be able to get good margins if farmers have, locked in some decent pricing for outputs and managed their inputs, but lower than last year. It's 2023-24 that I think that we're going to really see some challenges in managing that margin because of those high prices of inputs.
When you mentioned the Black Sea region, of course, it's not just a great producer and exporter of, food, but also those inputs like fertiliser. Is that a reason why you're expecting maybe we're going to see higher input prices continuing as well?
Yeah, so in particular at the moment, I'd refer to what's been happening with urea markets. We did see them come very much lower globally in the past 8 to 10 weeks. But what we're seeing now is strong signs that we're going to get upward pressure globally again. And that means that locally we won't have had enough time for global prices to be low for that to translate to lower prices here in Australia before upward pressure comes to bear on pricing here again. And by that, we're looking primarily at what's happening in the European market at the moment. There's more than 30%, and some people suggest forecasting as high as 50% of the production of the key ingredients and or urea itself being furloughed due to the margins for production just not stacking up, because gas, the main ingredient and on which Europe is reliant on supply from Russia, is the costs are going through the roof. So with expectations that you're going to have more demand for gas as winter encroaches on the Northern Hemisphere, plus Russia turning off the tap and also governments in Europe actually stockpiling gas and diverting it away from some manufacturing of farm inputs, including a country like Poland, which has done this, extreme possibility of upside. And so, you know, the high prices that we saw come to bear in November last year across the Northern Hemisphere, which then flowed on to impacts in our pricing here, you know, aren't out of the realms of possibility. And if you look at the flexibility we had last year in supply chains when we were still trading globally very closely with Russia, we just don't have that flexibility. So I think any upside on that urea pricing is going to be something that hangs around for longer than it did last year.
And that's, I guess, is it fair to summarise, we're looking at an elevated market at both the input and the output level going forward?
Absolutely. And the concern is that the output prices fall more quickly than the input prices. And that's where you get your margin squeeze challenge. And that's going to be what farmers will need to work towards managing over the year ahead.
Now, just lastly, the ABARES reports will come out next Tuesday, I believe, the crop report, and also just where things are travelling with commodities. Any tips or expectations or any market reaction you'd anticipate off the back of that?
Oh, look, I think we've got a growing confidence in the size of the Australian crop this year. I would expect there would be some upside to projections for Western Australia in particular, southeast in Australia, and even, northern New South Wales, perhaps maybe into Queensland, losing some, and central New South Wales, given the waterlogging issues. But on balance, I think it's fair to say that, we're probably not going to see last year's volumes projected, but moving towards those from ABARES June forecast.
Excellent work there. Thank you very much, Cheryl Kalisch-Gordon from Rabobank, for that comprehensive analysis. Thanks for joining us again on Flow.
Bye, Rikki.